The Fed just cut interest rates, but mortgage rates went up. That's what we're going to talk about today here on the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. And today we are talking about the fact that the Fed just cut interest rates September 2025. Though they did it in 2024 and the same thing happened, mortgage rates actually went up. I'm going to take you into the office and we're going to go talk a little bit more about some of the articles, headlines, and thought processes that go along with this topic. Let's go. All right, let's go, guys. Here we are. We're looking at article after article. Fed cuts interest rates, but long-term rates, including those on mortgages, rise. Mortgage rates tick up after the Fed cut, following a familiar path. Gosh, what did I just say, right? Mortgage rates roughly unchanged to start the week after rising last week, right? So these are all headlines that a lot of consumers just don't understand. And the issue is we have to talk about how the mortgage market is traded, how mortgages work, who owns them, to better understand why these interest rates go up and down. Well, mortgages are actually in the secondary market. So they would be mortgage-backed securities. So after a mortgage is originated by someone like me, being a loan officer, then it goes into the secondary market and actually gets, quote unquote, sold. That means there's an investor like a Fannie Mae or Freddie Mac. There may be a servicer like a Mr. Cooper or Cenlar or one of these other places that service the loans. And they're actually, that's who you're paying, but they don't own the loan. They're not the investor in the loan. Well, from there, those mortgages all get packaged up into mortgage-backed securities. Might have heard that terminology, or MBS, or mortgage-backed securities. Movies like The Big Short and Financial Crisis all taught us kind of what was wrong with mortgage-backed securities and the mortgages that were within them. Now, the reason I bring that up is because they're traded on the secondary market. Traders are trading them based on the information that they have available. And the reason why that's important is that all the headlines, all the information about the market is already known. Are we going to have more Fed rate cuts? What do we expect the economy to do? This is all a known quantity in regards to the thoughts, the projections, the ideas. And these traders are taking all that information in and making trades on it. So when we see the Fed rate cut, that was expected. That was absolutely the expected outcome. So once that outcome was reached, then typically the traders are selling and then making their money of that assumed thing that the Fed did, right? That assumed rate cut, that assumed, hypothetical before, and then becomes real life after of that rate cut. So it is not, and I repeat, underscore, not the Fed increasing or decreasing mortgage rates, because we're on the secondary market. We're an open market. So once the Fed does these things, if it's already a known quantity, if we already have been told this by the Fed or their minutes or whatever it may be, then that's when the market can kind of go the opposite direction than what you may be assuming. So you've got to understand, I'll put more links down below. You've got to understand that the mortgages are on an open market and they're going to ebb and flow with headlines, with things like the consumer price index, unemployment, inflation, the economy. All these different things are taken into consideration as mortgages are traded and as that mortgage interest rate is being shown to you out there in the world. So put your comments below. Let me know what questions you have. I do have good news for you, though. Fannie Mae has now come out and for 2026 now projected interest rates sub 6, meaning 6% or below. They've got like 5.9 on the fourth quarter of 2026. So they originally, for all of 2025, pretty much projected rates in the low 6s. Now they're slowly starting to project rates into the high 5s, which I think could unlock a ton of the market. So again, let me know what comments below and head over to my website, chicagobestmortgage.com, and you can download my free 7 secrets to buying home in Chicagoland. So cheers. Make sure and tune in and click that subscribe.